What I'm going to be telling you in this video is the truth, the whole truth, and nothing but the truth. You see that narration you've been planning to put in your transfer, family support, gifts, amala, home remittance, those things as a way to avoid taxes, they will not work. There is nowhere in the law where it's stated that gift is not a taxable income. Okay, I know a lot of you might not like me anymore after this video, but you still thank me because what I'm going to be telling you in this video is the truth, the whole truth, and nothing but the truth. So I encourage you to watch till the very end. You see that narration you've been planning to put in your transfer, family support, gifts, amala, home remittance, those things as a way to avoid taxes, they will not work. And that's why I said you might not like. Even gifts. Let's talk about gift. I've seen a lot of people say that if you give money to someone as a gift, that it's not taxable. And even the chairman of the Presidential Committee on Fiscal Reforms and Tax Policy has said the same thing, that gifts are not taxable. But there is nowhere in the law where it's stated that gift is not a taxable income. There is no way in the law. Unfortunately, I have to say it the way it is. If you receive a gift from anyone, whether it's a family member or an unrelated person, you would pay taxes on that money. Simple. So how about if you receive money from your brother abroad who sends you money through, let's say, one of these fintech apps for family expenses and all of that? Unfortunately, that income is also not tax exempt. Under Nigerian law, pretty much everything you earn as income or any kind of benefit you derive, whether it's in form of gift or something you worked for and you got paid for it, is taxable, except for specific kinds of income that are not taxable. Now, I'll give you an example of some of the incomes that are not taxable. If you earned a dividend from an investment outside of Nigeria and you brought the dividend into Nigeria through your domiciliary account in Nigeria, you won't pay tax on that income. Whether it's dividend, this also applies to interest as well, rent, royalties, yes, those categories. If you earn them from abroad and you brought them into Nigeria, you wouldn't pay any taxes. Also, if you invest in, let's say, companies that are wholly export oriented, that means this company just exports its product and it pays you a dividend. If it's a Nigerian company that exports its product and it pays you a dividend, you don't have any taxes to pay as well on that income. They will not deduct withholding tax on that dividend they are paying to you. If you invest in mutual funds, in collective investment schemes like mutual funds and any other of those kinds of money market funds and the likes, and you earn any return, those returns are tax-free. You won't pay any tax on those. If you draw money from your pension contribution, your regular pension contribution, let's say you've been out of job for a while and you decided to draw money from that contribution, that money will come to you without any tax. You won't have to pay any taxes on it. If you've retired and you're earning your pension, no tax as well. Another category is, you know how you're allowed to make contributions, pension contributions at a minimum of 8% as an employee. If you go ahead to contribute more than the 8% and you contribute, let's say over 8%, let's say 10% of your monthly salary, the other extra is called a voluntary contribution. So let's say every month you tell your employer, I want to contribute 20% of my monthly pay to pension. 8% will go to the mandatory contribution. The other 12% goes to your voluntary contribution. Now, that payment is tax deductible. That means at the point where they're calculating your income tax, your personal income tax as an employee, they will deduct that pension contribution that you're making. But then when the money goes to your pension fund administrator and you keep it there for 5 years, when you withdraw that money after 5 years, you are getting the money tax-free. You won't pay any tax on any withdrawals from your voluntary contribution after 5 years of the contribution. But if you withdraw earlier than 5 years, you would pay tax on each withdrawal, on the gains you made on each withdrawal, essentially, because the monies are always invested by the pension fund administrators and they pay you a return. So when you're withdrawing that money, both the money you're withdrawing and the return you're getting would be taxable. So that's in a nutshell, really. If you get gratuities are exempted. So if you get a gratuity after you retired, you won't pay any taxes on your gratuities. If your family gets a death benefit, unfortunately a family member has died and the employer pays a death gratuity or a death benefit, you will not pay any tax on that payment that the family receives. If you lose your job, let's say the company is downsizing and they fire some people or redundancy or whatever it is, and you get a bulk sum paid to you as compensation for losing that employment, or even not like they're firing you, but you have stayed in an employment and you're leaving and there is a bulk sum they are giving to you for leaving that employment. That is called a compensation for loss of employment or office. That money that you receive is not taxable, but there's a catch to it actually. If that money is more than 50 million naira, you will pay tax on the extra above 50 million. So that means if you get 50 million and less as bulk sum for leaving an employment, you are not paying any tax on that money. But if you get 52 million, you pay tax on the 2 million, because just the 2 million, if you get 55 million, you pay tax on the 5 million. That means 50 million of that money is exempt. The other small things, but those other things do not include gift and the like. So whatever narration you choose to put, it wouldn't save you from paying taxes. Let me tell you what will save you from paying taxes. I would go into deeper details in my next video, in one of my next videos actually. But what you need to do is to keep record. You see, with the tax man, the important thing is record keeping. It's not so much about what you narrate in your transactions. No, it's in keeping the records. Because when the tax man comes, what he wants to see is record. And it's not really about how you describe your transaction. It is in the documentation that is associated with those transactions. So, my friends, if you want to stay compliant with the tax obligation, I'll invite you to follow TaxStream. We have inside of our application, our software, we have a trained AI assistant called Martina Mini. Martina Mini is the most intelligent AI assistants in Nigeria today. You can ask any question and it will give you accurate answers based on the law, so that you're no longer misinformed and misled to think that, certain things that are being said in the general quarters are the case. No, get quality sound guidance. Of course, AI is prone to making errors, but we can guarantee that our AI assistants will give you 98% correct responses. This does not substitute the need for a professional tax advice, but we can tell you that at the basic level, stop asking ChatGPT or the other guys tax questions, because they do not know Nigerian tax law the way our AI assistant knows tax law. Because guess what? I trained that assistant with all the knowledge of tax that I know, and I can guarantee that you're going to get very accurate responses. So give it a try. www.taxstream.com. See ya.